Michael Saylor, the final warning, act before 2026. When Michael Saylor looked at the calendar and circled one specific date, his hands were shaking. I'm sitting across from him in MicroStrategy's headquarters, and the timeline he just showed me makes every comfortable assumption about the future collapse like a house of cards. 2026, he says, his voice carrying a weight I've never heard before. That's when the window closes. That's when the masses finally understand what's happening. And by then, it'll be too late for most people. Behind him, charts track monetary expansion, debt acceleration, and Bitcoin adoption curves converging on a single point in time. The convergence isn't coincidence. It's mathematical inevitability, and the clock is ticking louder than anyone realizes. Saylor stands up, walking to a massive screen displaying what he calls the Convergence Map. 3 lines intersect at 2026. The first line shows U.S. debt service costs surpassing $1.5 trillion annually. The second tracks Bitcoin's next halving cycle completion. The third marks when central bank digital currencies reach critical mass deployment. These 3 events happening simultaneously will trigger the largest financial restructuring in human history, he explains, his finger tracing each line to the intersection point. And most people are completely unprepared. The tension in his voice isn't fear. It's urgency born from seeing a future that hasn't arrived yet, but is already inevitable. But what's truly striking is what Saylor discovered when he modeled different scenarios for how this plays out. I spent 6 months running simulations, he recalls, pulling up spreadsheets filled with macroeconomic variables. Every model, every scenario, every possible path converges on the same outcome. By 2026, the average person will face a choice: financial sovereignty or financial slavery, Bitcoin or CBDCs, freedom or control. He shows me the game theory. Once governments launch programmable digital currencies, they gain unprecedented power. The ability to freeze accounts, expire money, track every transaction, implement negative interest rates, enforce spending controls. This isn't conspiracy theory, Saylor states flatly. This is stated policy from central banks worldwide. This is exactly where the picture changed for Saylor's entire mission. I used to think Bitcoin was about making money, he admits, a rare moment of vulnerability crossing his face. Get rich, preserve wealth, beat inflation. But I was thinking too small. He pauses, the weight of realization still heavy. Bitcoin is about preserving freedom itself. And 2026 is when that choice becomes permanent. Once CBDCs roll out, once the infrastructure is in place, once the majority adopts programmable money, there's no going back. The window for financial sovereignty closes forever. The stakes, as he presents them, are existential, not just for wealth, but for the fundamental nature of human liberty in the digital age. Wait a second. Don't miss this critical timeline detail that makes 2026 the point of no return. Saylor pulls up a Federal Reserve document dated January 2024, titled Digital Dollar Implementation Framework. This is public information, he says, highlighting specific passages. They're planning a pilot program for 2025, expanded rollout in 2026, full implementation by 2027. The European Central Bank has similar timelines for the digital euro. China's digital yuan is already operational. By 2026, the infrastructure will be in place, Saylor warns. And once it's in place, they'll manufacture a crisis, a bank run, a cyber attack, a market crash, something that makes people beg for the safety of government-controlled digital currency. The phone rings suddenly, shattering the intensity. Saylor glances at the caller ID, and his expression darkens. I need to take this, he says, stepping into an adjacent room. Through the glass, I watch him speaking with controlled intensity, his body language suggesting both urgency and determination. When he returns 3 minutes later, his face is grim. That was a contact at Treasury, he explains, his voice dropping to barely above a whisper. The timeline is accelerating. They're pushing for CBDC legislation in the next congressional session. 2026 isn't a prediction anymore. It's the official target date. The confirmation seems to crystallize something in him. The warning isn't theoretical. It's imminent, You haven't seen Michael Saylor's most urgent calculation yet. Let me show you exactly what happens if you wait, he says, pulling up projection model. Scenario 1, you act now. Bitcoin is currently $52,000. You accumulate before the 2024 halving, before institutional adoption peaks, before the CBDC panic drives masses into scarce assets. Your cost basis is reasonable. You capture the full appreciation cycle. He advances to the next slide. Scenario 2, you wait until 2026. Bitcoin has completed another halving cycle. Supply shock has hit. Institutions have allocated. Nation-states are competing for reserves. Price is $300,000 to $500,000. You're buying at premium prices with far less upside. The difference isn't just returns. It's positioning before or after the crowd realizes what's happening. But there was one detail in Saylor's analysis that made the 2026 deadline non-negotiable. The halving cycles, he explains, pulling up Bitcoin supply schedule. April 2024, the next halving occurs. Bitcoin's inflation rate drops to 0.85% annually. That's lower than gold's inflation rate, for the first time in history. He pauses, letting the significance register. From April 2024 to early 2028, we enter the scarcest period Bitcoin has ever experienced. New supply is minimal. Demand is accelerating. By 2026, midway through this cycle, the supply shock will be obvious to everyone. Prices will reflect that scarcity. The opportunity to buy cheap will be gone forever. Everything so far was preparation for understanding why Saylor considers 2026 the final warning date. 3 catalysts converge, he states, counting on his fingers. 1. The CBDC infrastructure goes live, creating urgency for people to exit the system. 2. Bitcoin supply shock post-halving becomes undeniable, driving institutional FOMO. 3. Fiscal crisis forces governments to choose between default or hyperinflation. He shows me debt projections from Congressional Budget Office. By 2026, interest payments on federal debt will exceed $1.5 trillion annually, consuming over 20% of all tax revenue. That's unsustainable, Saylor explains. They'll have to print massively. And when they do, the flight to hard assets will be panic-driven, not rational. You don't want to be buying during panic. Hard to believe, but Saylor predicts most people will miss the window entirely. Human nature is to wait for certainty, he says, his voice carrying resigned frustration. People want to see proof, validation, consensus before acting. But by the time something is certain, the opportunity has passed. He shows me adoption curves from previous technological revolutions. The internet in the 1990s. Mobile phones in the 2000s. The people who acted early, when it was uncertain and risky, captured life-changing wealth. The people who waited for proof got scraps. Bitcoin follows the same pattern. Early adopters at $100 made 500x. Current adopters at $50,000 might make 10x. Late adopters at $500,000 will make 2x if they're lucky. This brings us to Saylor's specific action plan for those willing to act before 2026. Step 1, he states with commanding authority, calculate your exposure to dollar-denominated assets. Cash, bonds, money market funds, bank deposits. Everything that's pure currency risk. He recommends a brutal assessment. If more than 10% of your net worth is in dollars or dollar equivalents, you're overexposed. You're on the wrong side of the wealth transfer. Step 2, develop a systematic conversion strategy. Don't try to time the market. Don't wait for dips. Just convert. Weekly, monthly, whatever cadence works. But start now and don't stop until your allocation matches your conviction. But what's truly striking is step 3, which most investors never consider. Prepare for volatility by accepting it irrelevant, Saylor explains, pulling up Bitcoin's historical price chart with all major crashes highlighted. Bitcoin has crashed 80% or more 4 times in its history. Every time, it recovered to new all-time highs. Every time, people who panicked and sold were destroyed. Every time, people who held or accumulated were rewarded. He leans forward, intensity building. If you're going to act before 2026, You need to understand that the path won't be smooth. There will be 30%, 40%, maybe 50% drawdowns. But those are buying opportunities, not selling signals. Because the destination is certain even if the path is volatile. Wait a second. Don't miss what Saylor considers the single biggest mistake people make when they finally decide to act. They allocate too little, he states with frustrated emphasis. Someone with $1 million net worth buys $10,000 of Bitcoin and thinks they're positioned. That's 1%. Even if Bitcoin goes to $500,000, a 10x, they've turned $10,000 into $100,000. Life-changing? No. Meaningful? Barely. His recommendation is far more aggressive. If you truly understand what's coming, if you've done the research, if you accept the volatility, you should have 25% to 50% of your liquid net worth in Bitcoin. Enough that when it transforms the monetary system, you transform with it. The phone rings again. Saylor doesn't even reach for it. That's probably someone questioning our latest Bitcoin purchase, he says with a slight smile. We just converted another $220 million yesterday. We're not slowing down. We're accelerating. Because every day closer to 2026 is a day closer to the point where Bitcoin becomes obviously, undeniably essential. And obvious opportunities don't make you wealthy. Acting before things become obvious does. MicroStrategy now holds over 150,000 Bitcoin, representing over $8 billion in value. They're not stopping. They're not diversifying. They're concentrating maximum firepower on the single asset Saylor believes will survive the monetary transition. You haven't seen the full scope of what Saylor believes will happen after 2026. For those who act now, who position before the deadline, the next decade will be transformative, he explains, pulling up long-term projections. Bitcoin absorbs a monetary premium from gold, real estate, bonds, art, collectibles. We're talking about $50 to $100 trillion in value flowing into a $1 trillion asset. The mathematics are simple. Prices will rise exponentially. But there's a darker prediction for those who wait. For those who don't act, who stay in dollars, who trust the system, the next decade will be confiscatory. Inflation will destroy purchasing power. CBDCs will eliminate financial privacy. Wealth will transfer from the unprepared to prepared at a rate that will shock historians. This is exactly where Saylor's warning becomes most personal and urgent. I can't make you act, he says, his voice carrying the exhaustion of someone who's been sounding the alarm for years. I can show you the data, explain the mathematics, share my conviction. But ultimately you have to decide. Do you trust the government to preserve your wealth? Do you believe inflation is temporary? Do you think the system is sustainable? He pauses, his eyes locking onto mine with laser intensity. Or do you see what I see? A monetary system in terminal decline. A wealth transfer accelerating exponentially. And a deadline approaching where the choice between financial sovereignty and financial slavery becomes permanent. But there was one final calculation that Saylor shares, and it's the one that crystallizes everything. Let me give you the math that changed my life, he says, pulling up a simple spreadsheet. In 2020, I had $500 million in cash. If I held it, assuming 15% real inflation, it would be worth $250 million in purchasing power by 2026. I'd lose half my wealth by doing nothing. He advances to the next cell. I converted it to Bitcoin at an average price of $11,000. Today, it's worth over $5 billion. By 2026, if Bitcoin reaches $300,000, it'll be worth over $13 billion. The difference isn't just magnitude. It's two completely different futures. One of slow wealth confiscation, one of exponential wealth multiplication. Everything so far points to one inescapable conclusion. 2026 is the final warning date because after that, the choice is made. Saylor states with absolute finality, the CBDC infrastructure will be operational. The Bitcoin supply shock will have driven prices to levels where accumulation is no longer accessible to average people. The monetary system will have entered crisis mode, forcing panic decisions rather than strategic positioning. He stands up, walking to the window overlooking Washington, D.C., the seat of the very government whose policies he's warning against. I've been called crazy, reckless, a zealot, but I'm none of those things. I'm just someone who studied history, understood mathematics, and acted on inevitable conclusions. The silence that follows is heavy with implication. Finally, Saylor turns back, his face carrying the weight of someone delivering a message he wishes wasn't necessary. You have 18 months, he says simply. 18 months to understand what's happening, to position accordingly, to choose financial sovereignty over financial slavery. After that, the window closes. Not gradually, not with warning. It closes permanently. And on the other side of 2026, the world will be divided into two groups, those who own scarce assets and those who own government currency. The choice, as he frames it, is mathematically simple. But the willingness to act before certainty, before consensus, before the crowd, that requires something most people don't have. It requires conviction. Everyone thought they had time, that the system would muddle through, that things would somehow work out. But the real story is that time is the one asset running out faster than the dollar. I'm giving you the final warning, Saylor says, his voice dropping to barely above a whisper. Not because I profit from it, not because I need you to act, but because I've seen what's coming, and I know the suffering that awaits those who aren't prepared. Act before 2026. Convert currency to scarce assets. Position for sovereignty. Because after 2026, the choice will be made for you, not by you, and the consequences of inaction will echo through generations. The clock is ticking. The window is closing. And the final warning has been delivered. What you do with it determines which side of history you'll be on.